Welcome everyone to Forest and the seminar, What do the European Commission, OECD and the Fiscal Policy Council say about the Swedish economy? My name is Andreas Bergström. I am the Deputy Director and Head of the Economic Policy Program here at Forest. We have done this before in this setting, more or less, and I hope it can become a tradition that the three, in my view, most interesting institutions publishing reports on the Swedish economy get together. We do this in springtime for a reason, because we have a quite fresh report from the Fiscal Policy Council and the European Commission, and OECD has reports every second year. So next year we will have an OECD report as well if we do the same thing then. Well, I'm very proud to present today's speakers and commentators. We have with us Ronald Albers, who is a senior economist at the European Commission. We have Christophe Andre, who is senior economist at OECD. We have Harry Flam, who is the chair of the Fiscal Policy Council. And they will be the speakers today. And then we'll have comments from first, actually, Elisabeth Svantesson, who is the economic policy spokesperson for the moderates and vice chair of the Parliament's Finance Committee, and Fredrik Olofsson from the Social Democrats, who is the chair of the Parliament's Finance Committee. Elisabeth and Fredrik are right now in a meeting that is slightly too long, apparently, with the finance minister talking about the suggestions from the European Commission, actually. So it will be very relevant once they come in. I hope that's soon. And then we will have comments from Annika Winst, who is the chief economist at the bank Nordea, and then Lars Calmfors, who is professor emeritus in international economics and scientific advisor here at Forest. This was planned since way back before we had the COVID-19 crisis. Now we will, of course, focus very much on this crisis and what Sweden is doing and should be doing further ahead. I know that we also have an excellent audience on YouTube. There are economists, politicians, lots of people from the government offices. Please use the live chat on YouTube, and I will bring your best comments and questions to the discussion. So I will follow the live chat on YouTube throughout this. So with that, without further ado, I would like to introduce then Christophe Andre, Ronald Albers will have the first presentation. So Ronald Albers, please, over to you, and I will get your pictures here and show them.
Yes, thank you very much. I give a brief perspective on the prospects for the Swedish economy, with the understanding that there is a clear awareness that the impact of the COVID crisis will be felt for a long period. Now, in response to the crisis, Sweden engaged in front-loaded and coordinated policy action, monetary, fiscal, regulatory, amending it in a succession of measures and using fiscal space that it has. And this first line of response, protecting employment, supporting businesses, ensuring liquidity, releasing buffers, is appropriate. There is, I think, also a broad consensus that that is the case. Now, we in the Commission keep detailed track of all the policy measures. An overview we also publish on our website at DG ECFIN for all that are interested. Just to mention also that part of this policy response was also enabled by the Commission, because we made a series of key state aid decisions under high time pressure. So there is also a European dimension to the national response. Now, despite these efforts to cushion the impact, we expect still a steep fall in GDP and a sharp rise in unemployment. We published our forecast already some weeks ago. So while the numbers for the first quarter were still relatively strong, with a sharp fall from mid-March onwards, the short-term and survey indicators that we have point to a sharp decline in GDP in the second quarter. There's some indication that maybe the deepest trough is already past, but still there will be a big hit, reflecting the fact also that Sweden is highly export dependent, highly integrated, and also many domestically oriented branches still are affected severely. Now, given the large uncertainty surrounding any forecast in the present circumstances, I will not focus on detailed numbers. So far, household consumption seems to hold up relatively well, which is encouraging. But of course, what we expected and what we see reflected in indicators, I think, is that there should be a deep fall in investment. There is also a question marks around the ability of investment and trade to rebound, and weak investment does not bode well for future productivity growth. Similarly, the resilience on the labor market is a concern. There have been massive supportive measures, especially for the short-term employment schemes, other forms of relief. But will all on temporary unemployment really be able to return to their jobs? Many who lost their jobs, or are risk losing their jobs maybe later, are weakly anchored in the labor market. A lot of them are in sectors that are still, where the prospects for full recovery are still uncertain. Now, Swedish jobs need highly skilled labor. In the EU, even among the Nordics, Sweden has a high need for high skilled labor. But in terms of education and skills, there are also serious integration problems. And especially the weakly integrated groups will find it difficult to regain lost jobs. And their employment, again, is more concentrated in precarious jobs, in the branches that are among the most severely affected. So there are large groups that risk being excluded for longer if the crisis persists. And there is caution about what it will mean for the recovery in terms of investment and in terms of the possibility to retain the workers. One may also ask about the financial robustness of firms, risks of negative feedback effects on balance sheets in an adverse scenario. It all depends how the various things play out globally and in the Swedish national economy. What is clear is that government finances will be severely affected. On the slide is just our latest published forecast. Fiscal measures are now around 5% of GDP, which is more than at the time that we closed our forecast books a while ago. So the deficit, if we do the exercise today, would be higher than this probably. But as said, it's not so much about the details of the numbers in a very uncertain environment. It is just to mention that there has been a robust and front-loaded fiscal response, both at the EU level and in Sweden. That flexibility in fiscal frameworks has been used to enable this. So in the EU, we have activated the so-called general escape clause of the Stability and Growth Pact to make sure that there is room for all the countries to use their budgets to tackle the crisis, and that we defer judgment on our normal fiscal rules. The same applies in Sweden, where also flexibility in the national fiscal rules has been used. That doesn't mean that the fiscal frameworks are abandoned, of course. There is still the notion that it's important to keep and return to medium-term orientation to ensure sustainability. But the exact path and space, and time in which this has to take place is something to consider. It will take time to adjust. It will take time also to make sure you don't jeopardize the recovery by going too quickly. Now, it's important also to recognize that in the acute phase of the crisis, the fiscal multiplier is bound to be far less than usual. Because there is a very unusual common shock that is hitting everybody. So fiscal policy, but also monetary policy, financial sector measures have an insurance character in these circumstances as much as a stabilization purpose. The idea is to front-load action to avoid permanent scarring and to make sure that there is a growth potential that is protected, because the risk to lasting damage is bigger if the uncertainty and the disruptions continue. So from there on, it will be important to move to next phases, to use a recovery strategy to implement reforms, to get the economy back on track again, and to help develop it in the desired direction. And that needs a strategy. It needs a state strategy to take that into account with targeted releases of the support measures. That can be depending from branch to branch.
Excuse me, Ronald.
That will have to be.
Excuse me, Ronald. Are we on the next slide? Do you see the slides?
Yes, and I was just about to ask you to put on the next slide.
Yeah, good.
Just now. because this was the final of this one. Yes. So maybe just to zoom out a little bit to see how the Swedish policy challenges fit with the wider EU picture. I just remind you that we've just launched a real recovery plan and the new multi-annual budget proposal. But what I will talk about is not so much about this budget proposal or recovery plan as such, because it's more, let's say, the policy angle and a little bit how that compares to the Swedish economic challenges and strategies, not so much on the budgetary details. On the EU budget, there was a dedicated, excellent seminar organized by our colleagues of the Commission representation in Stockholm on Monday. This is recommended viewing. It's still available on the web. You just visit Europahuset and then you can still watch it. So maybe just to very quickly recap, next slide, please, the essence of the Commission recovery plan. It is a bold and encompassing strategy, softening the impact of the crisis and then supporting the recovery with targeted investment and reforms to promote long-term growth. I don't want to spend too much time on the details. This is already quite a complicated slide, but just to quickly recap, it has 3 pillars. The first pillar is aimed at support for the member states through investment and reforms linked to EU priorities. That is important to underline, and more targeted towards the heaviest hit parts of Europe. This will be coordinated in the European semester. This is what we usually do every year, and where we also have, reports that we published in the spring, recommendations. I come back to that, and that is where every member state can also weigh in. They can discuss on how they can shape the reform and recovery process for the EU as a whole. So not only for the own country, but also for the others. So for Sweden, this is a place to also make the voice heard on how all these instruments are implemented. The second pillar mobilizes private resources, insolvency and investment support. And not to forget, it's also accessible, of course, to Swedish firms. And the third pillar has more of a health and protection dimension. Maybe we can move to the next slide. Translating this to how we view and what we say on the Swedish economy, this is mirrored in our so-called country-specific recommendations that we issued short while ago, that the Commission has proposed under the European semester, builds on our earlier analysis, but of course we have really adjusted the focus a lot in reaction to the COVID crisis. And our recommendations can briefly be summarized with the 3. The first one is to use the fiscal room to support the recovery and ensure the resilience of the health system. The second one is more on the wider and broader reform agenda, which is to support education and skill, to focus investment on the green and digital transition, so to have a clear path on which to relaunch the economy. And the third one, partly also legacy, is to enforce the anti-money laundering framework. Now, these recommendations intend to play to the Swedish strength while encouraging needed transformation and innovation. And I think the priorities overall square well with known Swedish spearheads. So that means privileging environmental, climate, clean energy and infrastructure investment. It also entails protecting and enhancing the knowledge base through targeting education, training, research and innovation. And these are priorities that also feature prominently in the national debate, and where I think that there is a large degree of complementarity. Now, importantly also, especially for Sweden, not to forget that in the EU approach, there is an emphasis on salvaging a level playing field, protecting the internal market, reviewing probably some of the specific measures we've taken in place that hinder that right now, but that were unavoidable in the crisis, and to then ultimately avoid entrenched divergences within the Union. And this is crucial because the fragmentation of the single market, lasting disruption of international value chains, a setback on integration will be really hitting the Swedish economy hard. So it's in the Swedish interest to also make sure there is a successful EU recovery. They are complementary, they are not contradictory. Now, perhaps if we just see from a broad view some parallelism in philosophy in the EU and in the national agenda, knowing that they should support and reinforce each other, the details still need to be filled in. This is clearly the case on the EU side. The Commission has come forward with a proposal, but now the member states, the Parliament still have to express, an agreement has to be found. So we need to fill in a lot, even especially of the operational details on whatever agreement is found. Certainly also on the Swedish side, where it will be interesting to see how a medium-term recovery strategy is staged, timed and filled in with concrete measures. And there is still a lot that has to be decided. Maybe the next slide. So For the period ahead, we will follow how that goes. We will also focus on some of the challenges. On the short term, this is monitoring the efficiency, the effectiveness of emergency support. I'm talking especially how we in the Commission and everybody will try to follow what's happening in Sweden. Then to see what happens in terms of recovery strategy, which stages, which focus, sector specific. So one could well imagine that it will not be so easy to just let loose everything in one go. Can be dependent on sectors, on situations. One interesting question will, for instance, be how to phase out the short-term unemployment support, the permitteringen. And in the medium term, it's about the green and digital transition. It's about the resilience of the healthcare system. And we will, of course, reassess also vulnerabilities, possible imbalances, knowing that we landed into this crisis with pre-existing imbalances. They still matter, but probably in a different way. But these include vulnerabilities, such as in real estate, and now especially commercial real estate, where there are large exposures and linkages also to the financial sector. Households so far have been resilient, which is an encouraging sign. They still could come under pressure, and all these feedback mechanisms could become a drag on growth and also on things like bank profitability. So with the strategy broadly mapped out, again, the question will be, what are risks to the outlook? Now, on that, just to recall, and we all, I think, have a broad agreement on that risks in health policy and economic impacts are always closely linked and crucially depend on expectations and perceptions. So it also depends on how willing are consumers to spend again, how will be the appetite to invest again, and then there are always the financial linkages. If we move to the next slide, just to note that you have seen responses also, let's say, in the financial markets, on the funding side, on those sides. It's important to not lose them out of sight. To be viable, firms need liquidity, would need to avoid ultimately over-indebtedness to stay healthy, and also needing funds to invest, and investment schemes with risk sharing could be helpful. What we see broadly is that sovereign spreads have overall remained contained, especially for Sweden, because there was this fiscal headroom. There were the buffers, and I think that even if there is a large funding need for the public purse to be filled, that's possible. What we also see, though, is that especially while on securitized debt obligations, the spreads have remained more contained. There has been stress in the corporate bond markets, and that means that in turn demand for bank loans has gone up. So in the Swedish approach, and in a lot of, let's say, the monetary and financial policy response to the crisis, liquidity to banks to maintain credit is a key element. There have been also elements to reduce the pressure on households, to make sure that these flows can keep going. But of course, if feedback effects kick in, if there is a longer or more problematic recovery than we hope for, also banks could face headwinds. And as we noted in the past, although there was a relatively healthy and encouraging starting position, despite ample risk-weighted capital buffers, the absolute share of funds in the Swedish banking sector is not all that high in an international perspective. If we move to the next one, just to zoom in a little bit, we could spend much more time on it. But apart from bank funding, in the Swedish case, what is important to notice is also that Swedish firms are very interdependent also through financial linkages like trade credit, accounts payable, receivable that they owe to each other. And that depends very much, of course, on the size, on the branch of activity. On the whole, Swedish firms have still a dependency on bank credit, and they are in international comparison quite highly leveraged. At the Commission, we're currently looking into these issues more closely. We haven't been publishing on that yet, but we hope to study this further. Now, what we know is that firms, of course, have cash buffers, but with a longer lasting impact, funding and the liquidity position could then become a problem if that is not appropriately covered. So this is where the support, near-term support versus the longer-term release and recovery strategy start playing into each other, could become a problem, especially for smaller firms in sectors that are the hardest hit by COVID. And then the financial independency could become a channel of transmission that we have to watch. Now, in this one, it's just an illustration. This, what we call potential liquidity stress index, is the ratio of cash and accounts receivable to accounts payable. So it tells you a little bit about how well firms will be able to meet their short-term obligations from liquid sources. And of course, the risk is that if one firm can't pay the other, the one that has to use the proceeds to pay its own bills will then also get into problems, etc., etc. What we see is that in this simple measure of liquidity stress, manufacturing looks less exposed than trade, and especially, let's say, the middle segment of the smaller firms looks more vulnerable. The very big firms, it's very difficult to interpret these figures because, of course, they have a totally different financial structure. So this is probably an oversimplification for them if they are multinationals that have many other ways to cover their needs. In all, these are vulnerabilities to be aware of. It underlines the importance of making sure that viable businesses are not pushed out of existence, because that could then become a next and dangerous phase of the crisis. At the same time, several firms landed in this with already a precarious situation. There's a healthy and normal rate of bankruptcies, a reallocation of resources from low productive to innovative purposes that should be encouraged. At the same time, as we said before, it's risky in the sense that if production capacity gets hit, if people lose their jobs, it will not get reintegrated so easily in the labor market. This is really a concern. With this, I think I wrap up, but I expect several more angles will feature in the remainder of the seminar. For us, it's very important to maybe dwell on the potential of targeted reforms, like in the labor market, like in education. And for that, the OECD is in an excellent position to shed light on it. So thank you. And with that, happy to pass the floor.
With that, I will actually directly give the word to Christophe Andre from the OECD, who will show his own slides, I hope.
Yes, thank you. Thank you for inviting me and for organizing this great seminar. I must say from the beginning that we don't have a report this year, so I can't give you official OECD recommendations. I can only share my own views about the Swedish economy. I'll start by saying a few words about the economic outlook and policy responses. I will highlight a number of upside and downside risks, and then I'll focus on two specific issues, the labor market and trade and global value chains. Regarding the economic outlook, we are going to publish our forecast on June the 10th. So I can't really give you numbers now, but as you can guess, we have a large drop in GDP in 2020. And perhaps the difference with other forecasters, we have a fairly slow recovery. So we are quite pessimistic about the speed of the recovery. One key issue is consumption, and there are several effects on consumption from the COVID-19 crisis. The first is the lockdown, or not really in Sweden, a lockdown, but at least a physical distancing effect. That's the immediate effect. We're coming out of it. The speed at which we come out of it is still a question. But there are other effects, like the fact that a lot of people have lost some income, and so they will probably spend less. There is also more uncertainty, particularly regarding jobs, and this is going to create some precautionary saving and may hamper the recovery. Another question is the change in consumption patterns. For example, some industries have been hit very hard, like restaurants, like travel, airlines, and how much they will recover and at what speed is also a very important question. Of course, since this is a global pandemic, we have weak exports due to the crisis, and also this will weigh on investment. Unemployment is rising. We are probably going to get to 9–10% unemployment rate in Sweden, despite the short-term layoffs. So this is a major challenge to deal with. On consumer prices, there are different influences. There is a supply shock, some disruptions in in value chains, some increased costs, and of course this could push prices up. But on the other hand, you have also a very big demand shock, and so this is the demand shock is likely to dominate and to lead to lower inflation. All this is surrounded by very high uncertainty, even more than after the global financial crisis. The responses have been first fiscal. I just give a few numbers here to remind. I'm not going to go through the extensive package that the government has put through. You've got a package of about 5% of GDP to support the economy. This is manageable because Sweden was starting with a very low government debt, 35% of GDP. The interest rates are really low, so there is no issue about sustainability. And the immediate priority is to contain bankruptcies and unemployment to preserve the growth potential. And we need to see how the situation evolves, and this support needs to be phased out at some point, but it needs to be done gradually in accordance with the developments of the economy, again, to really preserve the growth potential and facilitate the recovery. The central government also needs to continue to support local authorities. They were already in a situation that was not very good before the crisis, with rising welfare costs because of more old people, more young people too. So they needed resources, also investment needs. So now we need to be sure that they have the adequate resources to provide the welfare services, that they don't have to raise taxes in a difficult time, which would be detrimental to the recovery. So this is something to look at too. And in the recovery phase, demand might still be low, and perhaps an additional fiscal stimulus could be useful. Of course, the projects needs to be sound and to also improve the growth potential in the future. So you can think of infrastructure projects, of green transition, of affordable housing, or this kind of projects that could be put in over the coming years. In terms of monetary and financial support, the Riksbank has taken a lot of measures like liquidity provision, a cut in the overnight lending rate, some corporate lending via banks, and purchases of securities. So again, a big package, which was necessary, very prompt reaction. Looking forward, monetary policy will need to remain accommodative for some time. So probably the repo rate will stay at zero for a few years. And it is essential to ensure liquidity and prevent a credit crunch. For the moment, the situation is stabilized, but if the global economy worsens, there might be need for more interventions, and I'm sure the Riksbank is going to remain vigilant. Finansinspektionen has reduced the counter-cyclical capital buffer to 0%, and that's really a good measure. That's what capital buffers are for. That increases the potential to lend by about 18% of GDP. So that's quite important. And also there is an exemption for mortgage amortization, which is also welcome for households. Households will reimburse their mortgages, most of them, even if their situation is not as good as before, but there might be some need for measures like the deferring amortization and some debt restructuring in some cases. So other measures may be needed if the crisis worsens. Now looking at risks, the obvious upside risk is a treatment or a vaccine for COVID-19, which would facilitate things a lot. Even without that, you could have a faster pickup in consumption than we expect. That's true in Sweden, but also in other countries. That would facilitate the recovery. But there are also a number of downside risks. Defaults could be more important than we think. And in that case, there could be propagation to other parts of the financial system, liquidity issues. There are varying vulnerabilities across countries. Some countries have high government debt, some countries have high corporate debt. In Sweden, you have some vulnerabilities in commercial real estate, for example. You have also this reliance on wholesale funding, which is not so much of a problem when global markets function well, but in case there would be further disruption in global markets, this could be a tense situation and creating risks of a credit crunch. Unemployment could also be more persistent than we expect. The rising inequality could lower demand because the households that are now affected are mostly the lower income households that have the highest propensity to consume. So if they see a fall in their income that is bigger than other households, this can lower consumption further. We were already in a low productivity situation before the crisis, and there are a number of factors that could lower productivity further, like safety costs, like low investment, the erosion of skills if we have protracted unemployment, also a potential reduction in international trade and competition, and also there could be a weakening in international cooperation. We've seen trend tensions between the US, China, also US and Europe before the crisis, and the COVID-19 epidemic could worsen these trends. So this is an additional downside risk. Now turning to the labor market, one of the questions is how much reallocation of labor there will be. As an exogenous shock, you could say this doesn't require a lot of reallocation. But on the other hand, some sectors have been affected, like airlines, like travel, services that require face-to-face interaction. So there will be some reallocation of labor, and it's important to provide the right job counseling and training to smooth the transition. Another question is whether there will be an acceleration of automation. We had the trend before the crisis, and with this polarization of labor, basically the low skilled, they find jobs in face-to-face interaction jobs that can't be automated. And if these jobs are hit in this crisis and that continues after this crisis, they will find it more difficult to find jobs, and this will require reskilling and upskilling. More teleworking provides some opportunities, but also risks, particularly risks of offshoring. If people can telework from abroad, this might destroy jobs in Sweden too, so that's a risk. There might be also, with the development of internet use, the development of non-standard form of work, like platform workers, and then the challenge is to adapt social protection and ensure fair competition. The foreign-born are suffering, and the situation of foreign-born in the labor market was improving before the crisis, but it's going to be more difficult now, especially since they are generally working in sectors that are affected by the crisis. So there will be some measures needed to support them even more. Same for the youth. In every crisis, you see a very long scarring effects from the young people that couldn't enter the labor market very quickly after finishing their studies. So that's another challenge. And of course, for all these issues, the intervention of the Public Employment Service is going to be very important. And it's a bit of an unfortunate timing for Sweden when there was this project of restructuring. So it's going to be important to ensure the right resources and the agility to cope with situations that are different from what we've seen in the past. Also, you need, and that's an asset of Sweden, cooperation between social partners and with government. We will have tensions because there will be higher unemployment. Firms will have to to cut costs too. And there will be need for government support, for example, for training schemes. And so the cooperation is very, very important. And again, Sweden is quite well placed there. On education, the crisis may increase inequality if disadvantaged children suffer more from not attending school at some periods, or have more difficulty to work online, less support from parents. So the differences, the inequality we identified in previous reports is going to be even more acute. So it's even more important to deal with it. On the other hand, there are some different opportunities, for example, in the development of online courses. And I'll finish with a few words on trade and global value chains. Trade is very important for Sweden, which is very reliant on exports and very competitive. There were trends of deglobalization before the crisis, and they may be amplified. This is a risk. The global value chains, where Sweden had been very well positioned before the crisis, especially in higher value segments of these chains, they will also suffer. So it's important to both strengthen them, but to keep the benefits. There are trade-offs between resilience and efficiency. There will be a need for diversification, for building more trusted networks, building buffers, even if this implies costs. Information also to build up resilience is important, and contingency plans also need to be reinforced. Will there be an acceleration of reshoring? We had this trend before the crisis. It's possible that it's amplified, but the job content is probably not going to be very, very high because of automation. Even if some factories come back to Sweden, they will probably not be very job intensive. And finally, the crisis has boosted digitalization, although in Sweden it was already well advanced, but it's going to be even stronger. And there are a lot of challenges to address with this. One is infrastructure. There are also issues about security, about privacy, about taxation, about competition, and it's going to be really important to deal with these issues in the coming year. Thank you for your attention.
Thank you very much, Christophe. And I can also tell everyone that Elisabeth Svantesson and Fredrik Olofsson, who will comment later, are now with us. So they are now listening. So let's have our third presentation, which is Harry Flam. So please, Harry, I will show your slides here in a second. Go ahead.
Thank you. I should start by saying that the Swedish Fiscal Policy Council is not a forecaster. We are a fiscal policy watchdog. So part of the things I'm going to talk about is not what we dealt with in our latest report. Please, the next slide. This is the latest forecast that I have seen of the development of the Swedish economy in 2020 and 2021. It's published by the Swedish National Financial Management Authority, Ekonomistyrningsverket. As you can see there on the first line, the GDP is forecast to fall by 7.5% this year, and to rebound somewhat in the next year in 2021 to 4.5%. We've seen a number of forecasts for GDP this year and next year from various sources, and they tend to increase over time, and this is the largest that I've seen. You can also see that there are effects in the labor market. Unemployment is the last line in this table, and you see that the forecast is about 10%, 11% next year. The next slide, please. These are relevant figures. This is a forecast of fiscal savings in the public sector in the first line. And as you can see, there's a sharp drop in the fiscal balance to minus 7.3% of GDP this year and almost 3% next year. And this means that the public debt as a percentage of GDP, what we call the Maastricht debt, which is the consolidated debt of the public sector, is expected to jump by about 8 percentage points or more from last year to this year, and is expected to remain at about that level in 2021. This is all according to the Swedish National Financial Management Authority. One should mention that this area of fiscal savings is precisely in the area of the authorities' remit, so we should trust them. Next slide, please. So what I take from this forecast is that there is a very high degree of uncertainty about the development of the economy, and that uncertainty about the economy, of course, depends on the development of the pandemic. And in particular, there are two questions that are of particular relevance: the availability of a vaccine and a drug for treating the virus. That's one thing. And the next thing is when will the restrictions that are placed on the economy be lifted, not only in Sweden, but in the world at large, since Sweden is a very export-dependent economy. And the second question, which is also very, very uncertain, is what is the path of the recovery? Most forecasts project a V shape in the downturn and upturn. That is a very fast rebound next year. But as we heard from the OECD now, and some other forecasters are also saying, we may instead have a very protracted recovery. And that, of course, is a very important question for what type of policies and how much they will cost once the acute phase of the pandemic has passed. Next slide, please. Well, the measures that have been taken so far are have the character of damage control. The main aims have been to contain bankruptcies and unemployment. I also want to stress that the measures taken so far have been very flexible. They are temporary, sometimes only lasting a couple of months. So there's always a question whether to end the measures or extend them. And they're also open to redesign. And I think this is a very smart feature of the measures taken now. One should also, of course, take care that the measures are cost efficient. And it's very hard. That's very hard to assure in a situation where we were unprepared and measures have to be decided and implemented very fast. Most of the measures have been well targeted and efficient, but there's always room for improvement. And maybe I should mention one measure. There's now a reduction of labor taxes on for employers that there is a general reduction for all employers up to 30 employees, and that is maybe not a very well-targeted measure, but there is a possibility to redesign that measure in the very near future. When one thinks about the next stage of this crisis, the recovery phase, one should always keep in mind that fiscal stimulus measures should be timely, targeted, and temporary. And one should aim for measures that have high multiplier effects, and empirically we know that speaks for public investment and public consumption. Public investment is not always easy to implement rapidly, but there is always a possibility to support and increase public consumption. My impression also in the Swedish debate is there is a temptation to take advantage of a crisis such as the present crisis to advocate structural reforms. And structural reforms might be needed, but I am a little bit worried that there will be political discussions and disagreement about what measures to take if one wants to implement structural reforms in the recovery. And that is, as I see it, a danger lying ahead. Next slide, please. My final point is a very simple point. As pointed out before, the Swedish debt ratio was about 35% at the end of last year, and it's projected to increase to about 44% this year and next year. This leaves ample room for fiscal measures this year and for recovery. But my point is that there is no need to start to amortize the public debt after the crisis, simply because the real interest rates today are very low, and at present they are lower than the growth rate, at least the growth rate right before the crisis. And I've used a formula here for the increase in the debt ratio. S here is the debt to GDP ratio, and S subscript T-1 is the debt ratio last year. And what determines the growth of the debt ratio, or the fall in the debt ratio, is the relation between the real interest rate R here and the growth rate G times the debt ratio last year, and the primary savings ratio. P here is primary savings, the primary surplus or deficit in percent of GDP. And I plugged in numbers here in this formula to the right here, and I've assumed a real interest rate of -2%, a growth rate of 2%, and with a public debt ratio of about 44% this year and next year, we'll get a figure of -1.7% here. We have a small deficit, a small negative primary savings, about 0.3% of GDP. Add that here, and we'll see that the public debt ratio would actually decrease as a function of a very low or negative real interest rate and an ordinary growth rate by about 1.4 percentage points per year. So this means that if my calculation is correct, it will take about 6 or 7 years to come back to the debt ratio that we had before the crisis. Well, that concludes my comments.
So, thank you very much, Harry. And that was our 3 main presentations. And as I said earlier, we now have Elisabeth Svantesson and Fredrik Olofsson with us. There is already, I see, some internal debate among the viewers in the YouTube chat field. You don't need to participate in that, but you can, I would be happy to see questions and comments there that I can bring to the discussion later on. But with that, I will now go over to Elisabeth Svantesson, who is the economic policy spokesperson for the moderates and vice chair of the Parliament's Finance Committee. Welcome, Elisabeth.
Thank you very much, and thank you for arranging this seminar in the middle of a crisis. That's Fredrik and I are trying to handle some of the effects of the crisis. That's why we are late into the seminar. Ronald, Christophe, and Harry, thank you for 3 interesting and relevant perspectives on the Swedish economy. And I will give my view on the challenges Sweden faces, both in short, medium, and long term. The development the last couple of months has been extremely swift. And of course, the uncertainty of the coming months and years is so large that it is important to be as clear as it can be about the different phases of the crisis and what is required of us policymakers every step of the way. The way I see it, the crisis will consist of at least 3 distinct stages. The first, the lockdown stage, where we are now, although we have not had a total lockdown in Sweden. Hopefully we will leave this stage fairly soon. The government's main role, as I see it in this stage, is to mitigate the effects of the lockdown on jobs and enterprises. Companies and jobs that were viable before the crisis will, in most cases, be viable after the crisis. Therefore, it would be a huge loss to society if these jobs and companies disappeared due to the lockdown, since it would make it much more costly to rebuild the economy from scratch. And I often compare this with, like, the state here is an insurance company, because enterprises could not insure themselves against the effects of the virus on the economy. Then the next and second phase, which will gradually be entering the coming months, I hope, is when our societies and economies are opening up again. Then it will be time for a bit more of traditional demand stimulus to restart a depressed economy, I think. We do know, however, that there is a limit to what can be done. For instance, we cannot start major infrastructure investments because the planning period lasts many years. What we can do is to scale up maintenance and small investments in infrastructure, electricity grids, and so on. And I think we also need to allocate more money to our regions and to the municipalities in order to avoid layoffs in a situation where their tax income is falling. If we can afford it, I think some tax cuts to improve work incentives and investments would also be well advised, but it should be, as Harry said, well targeted and timely. One major issue during this second stage will also be how to phase out the big measures that have been put in place during the lockdown stage. Some can hopefully be ended in the near future. Others may have to be extended, and we cannot afford, of course, to spend this kind of money too long. But on the other hand, support measures might be needed for longer than previously thought, at least in some sector. And then the third stage, which we hopefully be soon, but it looks like it will take a year or two, is then to increase growth potential in the Swedish economy. We need more hours worked, higher productivity, a better environment for Swedish companies to grow, etc. At the same time, we also then have to start the deleveraging of the Swedish economy. This crisis has shown the importance of strong public finances. Hence, we have been able to implement unprecedented crisis measures and will be able to implement demand stimulus measures without jeopardizing the credibility of Swedish public finance. For Sweden, this has been and will be very useful during this crisis. And I think the most responsible thing for politicians to do is then to return Sweden to the same situation again, well before the next crisis. When that will happen, nobody knows, but it seems like every 10 years or so, we run into new crisis. So maybe in 2030, we will need to have a low debt again. However, the crisis is severe and the economy might continue to be fragile the coming years with high persistent unemployment and structural changes in the economy. Then the return to strong public finance will be delicate, of course, because sharp contractions and sharp contraction, I think, will be avoided. Finally, it is important for Sweden to increase the long-term growth potential. Here we need to focus on many of the recommendations that have been given for a long time by, for instance, the Commission, OECD, reform the housing market, increase flexibility of labor market, improve integration of those who are foreign born, introduce educational reforms, reduce regulations and improve conditions for entrepreneurship. And I also see the importance of increased efficiency of the government agencies and a focus on the core task of said agencies. So in the long term, Sweden has a great deal of work ahead to strengthen growth. Thank you.
Thank you very much, Elisabeth. I'm happy to see that we are now exactly on time. Everything is on schedule. And over to you, Fredrik. And after that, we will have a discussion. So, Fredrik, your turn.
Yeah, thank you very much. And thank you for the presentations. I couldn't listen to all of them, but I had them in advance. So I guess I know what was said in the beginning of the seminar. Of course, we still don't know how deep the crisis will be or how long it will last, but we will continue to work in line with the four-step economic strategy that we started with. First, to limit the spread of the virus and to support the healthcare system. We're still in that phase. And second, to mitigate the impact on jobs and businesses. We are still in that phase. The third, provide security for those who lose their jobs and to strengthen the opportunities to education and training for people who has become or already were unemployed. And four, of course, preparing for the restart of the economy. The economic response to this crisis is huge, of course. I mean, we have even added some billions compared to the OECD numbers on the slide. So the government has presented measures for worth approximately 245 billion Swedish crown. And we will probably, I would say, continue. It's not over with that. And this has been necessary decisions and the right thing to do in the beginning of the crisis, but all measures are, of course, not perfect in every detail, but most are temporary. And in the next step, it will become increasingly important to make sure that the policies are on target and cost effective. I mean, Sweden can afford this huge response thanks to strong public finances and low national debt. But even Sweden has limited resources. In the long run, there is of course, no economic recovery package that can sustain a still standing economy and societies more or less locked down. And it is crucial to open up the societies again. And when we are talking about the European perspective, it is very important for Sweden that we have a well-functioning single market. And in the beginning of the crisis, I mean, the trust is a little bit hurt here because in the beginning of the crisis, the single market was highly pressured by countries safeguarding the national interests, and it was on the expense of our common European ones. When it is possible to take the next step in the recovery of the economy. We know already that regions and municipalities will require additional funding. And it is for many reasons. We will have healthcare debt as treatment has postponed during this corona situation. On top of that, we still have the demographic challenge, as the elderly share of the Swedish population is expected to grow in the coming 10 to 15 years. Additional general reinforcements to regions and municipalities are vital for securing elderly care, schools and health system. Only to be able to maintain the same level as today will be a challenge from a financial perspective. And I think most Swedes understand what we need to improve quality even more, for example, in the elderly care. But investments in the public sector are also important to restart the Swedish economy, as Harry Flam pointed out before. This is important measures when you would like to stimulate the economy and make sure that we don't have layoffs and the rise of unemployment. And as the Commission pointed out, we have to become a greener, sustainable and more digital society. So we will also have to see more of public investments there as well. We have, of course, started this transition already. It's not a new thing. And you can even find measures in the response in these crisis packages when it comes, for example, to investment in infrastructure and broadband infrastructure to make sure that digitalization is a possibility in the whole of Sweden. But it's a huge task in the years to come, and it's important to make it as front-loaded as possible. I also believe that the most important reform in the years to come will be about education, to make it possible for people in this country to take another step up the ladder. And I think it's well advised from the OECD, the Commission, and the Fiscal Policy Council that education and training is an important part of the policy needed in the years to come. We have to strengthen qualification of large parts of the population. It's both education in the academic field, but also vocational training. And this is a day for Elizabeth and me as well. It's a day of European affairs, I would say, and the restart of Europe. And I would like to add a few more words on the European perspective. It is an interest to all of us to restore the growth of member states' economy as fast and as soon as possible. Calls for European solidarity and a common recovery strategy it's really important. But the proposed plan from the Commission, it will not have support in the Swedish Parliament, that's for sure. It must be negotiated. On the MFF, our basic positions has not changed. The overall volume is still too high. We need to prioritize harder, more focus on modern areas at the expense of other parts of the budget. Not only add a part of modernization on top of the old budget. Competence on taxation must remain in the member states. Loans on favorable terms backed by all member states. It's an appropriate response, a way to handle this situation, but not this kind of grants, which will be paid off for 20 years by my and your children. It also gives incentives to pay back the loans and putting in place reforms leading to sound economic policies and growth. The money is certainly needed to kickstart the economies, but if the money is spent well, then it should also create growth and add value and then make it possible for the different member states to pay back. It's also very important with conditionality, a strong commitment to reforms and sound economic policies is essential to promote growth. And I think it's important to learn from this and many crises before. We have learned that strong public finances is essential to tackling problems. And looking forward, there is a lot of potential for improvements to be done within the EU on this. I mean, we have large economies, important member states, and they have been running deficits for decades, avoiding everything, avoiding to do anything about it. This has been the case in good years and in bad years. And I think we have to have a different approach in Europe. Solidarity is also to make sure to prepare yourself. Thank you.
Thank you very much, Fredrik. So then let's have a discussion. All of us that have participated so far. So I welcome Christophe and Harry and Ronald and Elizabeth back as well. And I hope you can all, Elizabeth, your microphone is still muted. Please get back to the discussion here. So very interesting to hear all this, some different perspectives. I think one clear difference here between the European Commission and the Swedish debate presently is that the Swedish debate has been almost exclusively about the here and now, the acute phase. And now we start talking a bit about what will come ahead. We don't really have a Swedish plan for the next phase as yet. So maybe this is a question then for Fredrik and Elizabeth. When can we expect a Swedish policy for the next phase? Some sort of framework where we're going next, and what will it be? We should start. Maybe Fredrik from the government party here.
Yeah, thank you. I think I actually pointed out a few very important measures for the at least 10 years into the future, 10, 15. First, it is to meet the demographic challenge, and it's a lot about funding for municipalities, but also education and training for all the people we really need to hire in the elderly care, childcare, and in the school system. It's a big task. It was big before. It's even bigger and perhaps more important today, especially when we listen to the debate on the healthcare system and the elderly care. This is extremely important. It's a really important task for state, for regions and municipalities. We have to make sure that this promise to the Swedish people is valid. Second, it is to make Sweden greener. We need a lot of public investments to make that possible, and then to make sure that the people unemployed today, and perhaps also a few of them who is going to be in the months to come, need to retrain, and education will be the silver bullet for having a strong labor market participation in the years to come as well. I think that's the main focus for us in this recovery phase.
Will we see something from the government on this in the near future? Will it be in the budget this autumn, or when will we see some sort of document from the government? When do you think?
Yeah, I really hope that we can leave this phase of crisis and that it's going to be possible to have a more normal budget process in the fall. I'm not sure we're going to be there. I think there are worrying signs, and we don't know how this lock up when it comes to different countries and even Sweden are going to be. So, but I hope we are going to have a more normal budget process and be able to look a little bit further ahead than we have been for a few months back in time.
Elisabeth, do you have any ideas on when could be the time to start the next phase? It seems that the European Commission is already there. They're already going with their suggestions. Yes,
and that's good. We have to think at short, medium, and long term at the same time. And I try to say something about that. What's worrying me, the Swedish economy in the longer run, is that. And I think about that almost every day, that we enter this crisis with a higher unemployment rate than most other countries in the European Union. And we also have the lowest economic growth per capita in the EU. And that should be in the other way around. But now we're here. And so it means that we have a lot of very important structural reforms. We need very important structural reforms after this first and second stage, as I pointed out. There's a third stage, which will come next year, I guess, must focus on that issue, because otherwise we will never take back Sweden into healthy public finance again too. So it's important with structural reforms, but as Harry said, they must be timely and targeted. And we don't really know how long will these different phases be? But I guess we're entering in the second stage quite soon.
I would like Ronald maybe to comment. As you heard from Fredrik Olofsson, it's not universal praise here from Sweden for the EU plans. Do you have any comments on that? How do you think we will move forward on this?
Well, first of all, I hope everybody can understand that in my position here today, it would not be appropriate to comment too much. The Commission has made a very clear and very bold proposal. I think, and that is what I try to underline, that there is thinking about it behind it also on medium-term priorities and strategies. And as I try to say, you could stress the differences. You could also stress that there are some convergences also with priorities that are high on the Swedish agenda. And like I stressed and what others have said, it's very important to recognize that keeping the European economy together is definitely a common interest, and not least the Swedish interest, because it's very clear that Sweden is very much dependent on this global and European integration. So I think that there is a lot of common ground there as well. And for the rest, of course, the next stage is really that it's for the member states, for the parliament, that there is going to be a longer process. Let's see how long it takes to see how we bring this forward. I think it is important, especially to start filling in as much as possible, to start thinking ahead the next stages. Like I always said, even concerning our blueprint, as it were, how to fill that in on the national level is also a matter of the consultation within the EU debate, like in our European semester. For a country like Sweden, we will enter a dialogue. We will follow it very closely from the Commission and from other international organizations. We're very keenly interested, of course, in how the Swedish debate develops. So we will be ready to take part in it, and do that. We will not lecture you. We will not, of course, start prescribing exactly what you or others should do in that sense. It's a game where everybody, with many actors, where everybody has to play its part. Like I said, on the more budgetary implications, there is this excellent seminar I can refer you back to, which is on our representations website, and that was very well summarized, I think, and very interesting. And yes, well, for that, I think I'll leave it here. I just wanted maybe to mention that already a lot of the things I highlighted came back in many of the other interventions about the need to go to a staged plan. And there are some very concrete questions on how to move from the acute phase, in steps and probably with differentiation into the next. For instance, when you talk about short-term unemployment or short-term employment support, what do you do with these people that are on there? Do you just keep them on hold? Do you maybe already want to engage them in some training or skilling processes while they're hopefully waiting to be reintegrated. There are many of these very concrete and acute questions, but of course these are mainly national questions in the first place. So we're very keen to see what happens on the Swedish side.
In the Commission proposal, a big part is kickstarting the economy, and we see a lot of discussion about that in Sweden as well. That this could be the possible next stage, and I think everyone brings out their favorite suggestions for what we should invest in and what we should do in the next stage. I think that's quite natural. Are we sure that we need to kickstart the economy? Do we need to spend a lot of money, or might there be actually a rebound effect? There is maybe a built-up demand since people have been locked up, and now they have, when they are released, they have money to spend, etc. Do we all agree that we actually need to spend a lot of money in the next stage? Would be interesting to hear several of you about that. Maybe I spoke a little bit about Christophe with Christophe about this yesterday. Maybe you could comment from OECD.
Yes, well, we don't know exactly the amount of stimulus we will need in the third phase when the economy starts to recover, but probably still with relatively high unemployment and perhaps fairly slow growth. So maybe we need more investments, and maybe it is also a good time. For example, infrastructure projects they can have an advantage because we know we need some investments in infrastructure and local authorities. There needs to be some renewal. So it's a good time to try to boost this. In addition, all the construction industry, they are going to be in a difficult position. So I mean, if you do investments now, you also help the industry keep alive, and it's really the type of counter-cyclical measure that is necessary. So these type of measures also, the green transition, there will need to be some investments. I don't want to be too specific on this because you can arrange the priorities differently, but if you need charging stations for electric cars or more investment in biomass and things like that, I mean, that may be also appropriate. So, I mean, if long-term investments are needed, it's also good to bring them forward.
I understand that some things, that maybe charging stations for electric cars can be built fairly quickly, but apart from that, infrastructure investment, can that be timely, targeted, and temporary, as Harry put it?
I think in some cases, yes. You have big infrastructure projects that need a lot of planning, but if for example you need to renovate schools or renovate roads or railway tracks, and we know there are such needs in Sweden. This can be done pretty rapidly. So you don't necessarily need to have a big flagship project that needs to be planned over several years. And in addition, these big projects, sometimes they are not really labor intensive. So it's not very good for it has a limited impact on jobs. But some smaller scale projects that are job intensive can be very fruitful.
I would like to hear from Fredrik and Elisabeth as well. Do you think that we need to spend a lot of money to kickstart the economy, or Elisabeth, please?
I think it's a bit early to say how much because it's extremely difficult. It has been and it is difficult to predict how this crisis will continue, and of course it depends on the virus too, and how if we can open up our communities. But of course we will need some kind of kickstart. Fredrik mentioned education, very important. And I think, as I said, maintenance, big infrastructure projects like höghastighetståg might be, that won't kickstart the economy for the 2 or 3 next years. But education, maintenance, and also supporting municipalities, regions, so they don't need to make cuts in the welfare system. So that's 3 examples, as I think.
Fredrik, do you?
Yeah, well, it's extremely hard to say. I think it depends on how long the crisis will continue, or if the problems are going, if we have them back again in a few months or so. But I think it's extremely important. I think the local and regional level, the municipalities and the regions, they must feel secure when it comes to funding, not just this year and not just next year, but for a longer period. Otherwise, there might be a risk that they actually cut some investments they were supposed to do. I mean, they are building schools, elderly care centers, and the hospitals, and they have plans for that in the years to come. So it's extremely important they feel safe when it comes to funding from the state. It's very important also for not just for public consumption, but also for investments.
That's what we sometimes call the semi-automatic stabilization, that we just keep the spending at the same level as we used to have it. Harry, you spoke about the temptation for structural reform. I don't think I've heard an economist talk about structural reform in that way before, that it's as a problem. What's your view? And it could be interesting to hear from the others as well. I mean, after the crisis in the 1990s, we had big structural reforms in Sweden, and I think we are all quite happy about that afterwards. It really led to a lot of growth in the upcoming decades. Do you think that, are we not in a stage where we need big structural reforms? Should we focus on the smaller details and restarting the economy, or where are we at?
Well, as I think Elizabeth put it best, we are now in the acute phase. That's the phase of damage control. The next phase is the rebound, restarting the economy. And the third phase is structural reforms of all kinds. We have tax reform, we have educational reforms, and there are other areas as well. I'm just afraid that political disagreement about structural reforms is going to hamper the recovery, the immediate recovery. I see the need for demand stimulus as the main instrument to make the economy come back to sort of a normal level. So you know, it's evident that we could be bogged down by labor market reforms, tax reforms, and so forth, instead of taking the measures that we need to take in order to get back to some normalcy. And that might be maybe next year. I would probably say that a year from now, and maybe a little bit later next fall, we'll be back to normal. And then we can think about, you know, all the other things we want to do to increase growth.
Okay, so your advice would be something like postponing the debates about some of the structural reforms. We have a quite heated debate right now because we have a
yes
about labor rights. Yeah, so I think there was actually another thing you said that I think we should, both you and Elizabeth spoke about the debt level, and Harry, you seemed not very worried that, I mean, it would be enough if we keep the 0.3% surplus that we have kept that we have as a goal officially right now. That would be quite enough to slowly bring back the debt level. Elisabeth, you sounded a bit more worried that we, like in the third phase, we have to start thinking about getting back to a sustainable debt level. Do you really differ here, or do I just hear different nuances here? Elisabeth?
I start to think of that already now, I have to say, but it's not the time now to come back, of course, but we need to have that in focus and in mind. And I remember times before this crisis, many came to me and said, oh, Sweden has too small loan. We need to do big investments, or, you know, it's a problem that we have this kind of very low loan. And I said, welcome back after the next crisis. And that's what I'm saying now. Now we're here, and we are so happy. We have a low debt. We can do all these different things to really help the economy, help jobs and companies. And I think it's very important that we go back then, as I said, maybe in this decade to a low debt again. That's my exactly how low it should be, but it should be low.
Okay. I think also there were many interesting things in the OECD presentation about what changes will happen. So we are talking about like structural policy changes, but actually structural changes can happen without any policy changes. So if we first take the labor market, where there were several interesting points from Christophe, like will we see more an acceleration of automation? Will we see more teleworking? Will we see maybe more of the gig economy, etc.? Should we expect like that this crisis like accelerates already existing trends and maybe starts some new things on the labor market, and that this is something we need to keep track of? What do the rest of you think? Anyone actually could start? I could give the word to you, Fredrik.
I think many of the trends we could see before the crisis will be valid afterwards. Of course, digitalization, work from home, and all of that. I'm afraid we will have, I think the gig economy is probably a big risk. I see it as a risk because if we look how the crisis hit people with 0-hour contracts and low or none job security, and if we look for in other economies like the US economy, I don't think that's particularly good for society. So we will probably have a big discussion about, as was mentioned before, when it comes to labor rights, and I'm not sure Elisabeth and I have the same views there, for example. But we always had big differences on the labor market, and the Swedish model is to welcome that and to make sure that people can take the next step when it comes to jobs. We don't try to keep old jobs in, because that makes us in the long run not so rich and not so happy. But that's a whole ecosystem with both labor rights, with possibility to education, with the possibility with the strong unemployment benefit system, and well, it's a lot of different parts that must be on place if we would like people to get on board and continue this model of Sweden, embracing the future.
Yeah. I should try to give maybe the final word to Elisabeth, because I know you both have to log out now and log into your next meeting. But Elisabeth, would you like to say maybe some final word on this, or are you already?
I'm already logging out. No. What do you want me to comment on? I'm sorry. I really.
Yeah, I understand that. So what Fredrik was commenting on was, I'm losing track of this myself now.
Yeah. But we will see structural change in the labor market.
Yeah,
we will have more
exactly.
flexibility. I think we want security for the people who work at the labor market, but also we need more people to come into the labor market. That will be a very big issue. It was a big issue before the crisis, and it will be even a bigger issue in 1 or 2 years. And so that's my take on it.
Thank you very much. I see Fredrik already logged out now. Thank you, Fredrik, as well.
Thank you.
Afterward. See you at some other time. So we will now move over to the next step here, and that is our expert commentators, Annika Vinst, Chief Economist at Nordea, and Lars Calmfors, Professor Emeritus and Scientific Advisor at Forest. And I will start with comments from Annika. Please, over to you.
Thank you very much. Can you hear me?
Yes.
Yeah, thank you. And thank you for the invitation and for interesting presentations and reflections. And I agree with a lot of what I have heard today, and maybe I am a bit less pessimistic about the growth numbers. And the reason is what we heard in the beginning of this seminar, the household sector actually. And what's important here is that we don't have problem with the balance sheet this time. Very often when we ended up in crisis, we have problem with that, and they take very long time for houses to come back when they need to start to save and pay back their debt. And we don't have that situation this time, and that's of course good. And the reason why households not are consuming is of course depending on the restrictions. So when we open up those restrictions, I believe that the household sector can be there and start to consume rather okay. And we did our forecast in the end of May, 27th of May, so it's rather new. And our forecast is that we will end up with the growth number with -6% this year and 4% next year. So maybe we have seen the bottom. I think the April was the worst month actually we had. I mean, now slowly is going in the right direction. And I also have given the politicians, and I say politician because it's a cooperation between the governments and opposition and authorities, okay, during this acute phase. And I think it's important to remember that we have been through an extreme crisis, especially it has been really fast and now also deep. And we are also seeing problem in the service sector, which we're not used to, and we don't have the tools to handle that sector, and that sector don't have the names they want to talk to in this situation, and actually they don't know what they should ask for either. So it's a really new situation, and if you look at it from that position, I think they have done okay during this phase. But then we have to think about how do companies, enterprises act. Yeah, the first thing you do when you enter up in these sorts of crises is, of course, to cut costs. And that's why we have seen temporary layoffs increased so much. And lots of companies have done that. And now they are in this next step. And that means that they look at their balance sheets and they secure liquidity. And some of them have already done it, and some are still there in that pace. And then we have the third one, and there we are now preparing them to planning for a recovery. And it's important to remember that companies have survived during this deep crisis is because of the rescue package they have managed to use. But the problem is, as we have heard before, it's temporary. And Harry said that they need to be temporary. Yes, I can understand that they need to be temporary, but it's also very important to know that we need to prolong them as long as we have those restrictions, because it's very tricky for companies to plan for the recovery and open up during the autumn if they don't know if they have those money, if they can trust the system, if they still can use those stimulus during the autumn if they are necessary, because we still have those restrictions. So I think the most important politicians need to do now is to say that we will prolong those as long as we have those restrictions and we have those problems. And that's also important if you compare with other countries, because they don't have those temporary setup as we have in Sweden. And that means that I'm also a bit more pessimistic about the debt level. And I believe that we will see more money, and we have heard that from the politician as well. Our focus is 100 more billion this year. And that means also that we will have Maastricht close to 50% compared to those plus 40, as we have seen from other forecasters. But I agree with a lot of you that that's not the big problem. We're coming from a very low debt level, and we have no choice. The alternative this time is that companies run bankruptcy, or we will see skyrocketing unemployment, which of course is much worse. So I think in the short view, we still are in an acute phase, as we have heard here. And to believe that companies will start to think about structural changes or climate or green or whatever you talk about, I think that's really to be too optimistic in this phase. They will do that in the medium term, but at the moment they still are focusing on to survive, actually. And in the medium term, I think that it's very important to manage to do the right structural changes and to handle climate and so on. It's a cooperation between companies, politicians, authorities, but also with the universities, because we will see structural changes, and therefore it's very important to work together, but it's absolutely too early as I see it. And to sum up this, I will just say that please, to the politicians, prolong relevant measurements and do it before the summer, so companies can plan for recovery and plan for survive this crisis, and not for bankruptcy and redundancy, which is the other way. So that's very important to keep company calm and safe, that they still will be there after the summer. Thanks.
Thank you very much, Annika. So I will directly go over to Lars Calmfors, and I will show your slides here as well, Lars. There you go.
Yes, I hope you can hear me.
Yes.
Yes, I'll focus on 3 points, if I can get the first slide. The outlook for public finances, the recovery from the crisis, and how policy should change over time. And I agree with much of what has been said, but I also disagree on some points. So with the next slide on public finances, already decided fiscal measures, they will probably amount, as we heard, to around 5% of GDP this year. More will come, say 2% of GDP, then add the automatic stabilizers, say 5 to 5% of GDP, and then I end up with as much, with as high a fiscal deficit this year as 11 to 12% of GDP. I agree with Annika that the debt ratio could increase to as much as 50% at the end of this year. With a slow recovery, it could continue increasing. I would not be surprised if the debt ratio after the pandemic reaches close to 60%. Next slide, please. This would be no higher than Germany or Finland before the crisis, so we could live with that. But as we all agree, the current crisis has shown how good it is to start with a low debt ratio in a crisis. So we should get the debt ratio down again after the crisis. And then we need to formulate a very transparent plan at some stage for that. I'm not so optimistic as Harry that this will solve itself automatically through growth. First, the reduction in the debt ratio, it will be slowed down because the government also borrows in order to finance its lending, for instance, student loans and so on. So the figures will be lower even with Harry's assumptions if you take that into account. But more importantly, I think there are many reasons why real growth may be slower in the future than in the past. Conditions for growth will be much less favorable than they were after the crisis in the 1990s. Then there were a number of low-hanging reform fruits to exploit, which there is not this time. To achieve sufficient nominal growth, and in fact, it's nominal growth that matters for the debt ratio, we might need a dose of moderate inflation, just as moderate inflation after World War II helped reduce debt ratios in many countries. So it might be appropriate for the Riksbank to overshoot the inflation target for some time, which would also help then revive the economy. I agree that we should think in terms of three phases, if we go to the next slide. An acute crisis phase is where we still are, a transition phase when the economy is still severely affected by the virus, with contagion and thus also economic activity perhaps going up and down. So I would be a little bit more pessimistic about this phase. And then first after that, a more definite return to normality. If we're unlucky, this transition period could last for say 1 or 2 years. Remember that the Spanish flu 100 years ago lasted for 2 years. There were 3 peaks, with the second one being the most severe. I'll focus now my comments, if we take the next slide, on fiscal policy during this such a transition phase. And first, I would like to stress the interdependence between the pandemic and economic activity. The most effective way of raising activity is, in fact, to suppress the virus. Then we need fewer restrictions, we need less social distancing, which now is holding back consumption. So a radically stepped up test and trace program, that is, in fact, very effective fiscal policy. It will be expensive, say 10 to 20 billion kronor over a year. But that is peanuts compared to the already decided fiscal measures. What about then more ordinary fiscal policy? Well, so far we haven't had ordinary demand policy. Instead, policy has insured firms and households against income losses. And we all know that the aim has been to preserve socially efficient matches between firms and employees to help facilitate a restart of the economy when that comes. In a transition phase with less contagion, yes, there would still be need for income insurance, as Annika argued. Resources must be provided for municipalities and regions responsible for health and old age care. But gradually, we should think more about demand and multiplier effects of policy. Perhaps a temporary VAT cut might be an appropriate policy at some stage. Then, as has been stressed, we should think about preparing the economy for a more definite restart. This could motivate investment subsidies, accelerated depreciation or tax deductions. But as several of the earlier speakers have stressed, one shouldn't expect too much from this because large investment projects take time to start. But front-loaded investment subsidies to adapt workplaces in order to reduce contagion risk, that is an obvious candidate. An expansion of the tax deduction for repairs and maintenance, ROT-avdraget, that is another. And of course, a period of lower economic activity, that is also an opportunity for human capital investment, as we've heard, through education and training. And a very low-hanging fruit there would be to expand language training for immigrants. There are many immigrants who have lost their jobs in hotels, restaurants, retail. Investment in digital knowledge, that would also be worthwhile. And of course, we need resources for healthcare and for training for those who could work in healthcare and old age care. Perhaps we need economic incentives topping up unemployment and other social benefits for participants in such education programs, perhaps linked to achieved results. Then, and we come to my last slide, I think one also needs to think through the very generous scheme for short-term work. That has been very effective in preventing unemployment. I mean, without it, unemployment would now be, say, 5 percentage points higher, perhaps even more. But one must recognize that over time, trade-offs will become more difficult, because the government is paying people for doing nothing. It means that existing structures that should be adjusted are preserved. Existing and stagnating firms are favored relative to new and expanding ones. And even if people are in the long term to go back to earlier activities, it is of course a social loss if they are not in meaningful activities during a protracted period. So how should one deal with this? And I'll end with that. One could raise requirements on firms with short-term work schemes to provide training for their employees. I think one should gradually reduce the subsidy level. I think, in fact, we should move over. When we do that, we could, in fact, prolong the reduction in payroll taxes. We could expand that. We could give more recruitment subsidies. Perhaps one could even think of a scheme that would subsidize firms for renting out their employees to other firms to avoid that, so that is not less profitable than having the staff furloughed and doing nothing part of the time. Well, I focus now on the transition phase, not on what comes after, but those were some ideas. I'll stop there. Thank you.
So thank you very much. I would now like to see all of you for our final discussion here. So I think there were several interesting parts here that we should, maybe we should start by actually going back to what we spoke a little about in the last discussion about the structural reforms and maybe comparing this to the crisis in the 1990s. So I think there are a little bit of different views here, and I would be very interested also to hear from both from our main speakers also about this. So we talked about with Harry Flam about this, but I would like to hear from maybe Ronald and Christophe what your views are. It's interesting to hear an outsider's view on the need for structural reforms in Sweden. Maybe we could start with Ronald.
Yes. Well, what I observe is that there is clearly a huge breadth of items to discuss. So that will be quite an exciting period to see how this all goes. I think you should be a bit careful to compare to the earlier crisis, because the nature of this one is quite different from the one in the 1990s and also from the great financial crisis. So I think you should be aware of these differences. And in many ways, it will be a far more uphill battle. Like I said, I think if you think this through, the nature of this crisis is quite different. Also, the kind of analytical tools, the kind of models you should think in on what the likely effects are. It's about substitution in time. It's about substitution between alternative purposes that are often cut off. It's about hysteresis effects. You cannot easily expect that multipliers that you could use, like in the 90s, when there was a depreciation, when you could basically benefit from the rest of the world lifting Sweden up again, and then doing some of the, well, but it was totally low-hanging fruit, but at least reforms that could be agreed on and that could pay off. This is a far more uphill struggle. I think Sweden, of course, comes from a favorable situation, but still, this is not only a matter of public spending, but it's very important to make sure that it's targeted, to limit the deadweight losses, and like I said, has been said also, to make sure that it keeps also the innovative trajectory, so that you don't only try to fossilize an existing structure. It's important to survive. It's also important from there in another phase to start moving forward again, and that is not so easy to achieve. I also have some nagging doubts about, let's say, the risk. Like I told, there are potential feedback effects through all sorts of channels, including financial effects. I'm not pessimistic in the sense, in many ways, you know, the fiscal headroom is a great thing to have. It's good to use. It makes sense to use. You have that opportunity, and that's a comfortable position compared to some other places in the world. That's positive. Sweden has many strengths to play to, but like I think has also been stressed, it does depend also on the integration and the possibilities to make sure that it can keep playing to its strength and to keep its exporting industries alive. I have some nagging doubts also about the risks if you don't manage to make sure that you control it and that you keep employment, that you keep investment going back. And that is a lot to do with interdependencies, with path dependencies, with sentiment. So there are several risks on the road. And don't forget, Sweden already entered this in a slowdown phase. And productivity growth was weak, as was mentioned. You were already kind of slowing down. Now, one of the things in our analysis that maybe not always has been well understood is in terms of imbalances. We also worry about the fact that there is this savings, investment, spending imbalances if the household sector, keeps having to borrow. If people are more insecure, maybe they are not so much willing to spend, maybe there is not enough incentive to train. Once you have balance sheet adjustments in any sector, these are long and their effect on the real economy can be protected. So I think I'd like to close off here, but just to say that, no pessimism, but surely reason for caution.
Yeah. Christophe, I would like to hear maybe from you as well about the need for structural reform in Sweden.
Yes. Well, basically, I agree with Harry. I think structural reforms are very important. We have mentioned a few areas where they are needed, like the labor market, the housing market. But actually, the priority now is really getting out of this crisis. Yep. So, I mean, this should be the priority. I understand the labor market reform. It will take time anyway. It's scheduled to be implemented maybe in 2022. So maybe by 2022, we will be out of this crisis, hopefully, but it's not obvious. There are also sometimes short-term disadvantages of reforms, and you see the benefits after a few years. But initially, for example, if you remove job protection, you will see the benefits in 5 years, but maybe in the short term you have a negative effect. So the timing is also important, and I think it's not really the priority. There are areas where perhaps some reforms could help. If you think, for example, of the tightness of housing supply, the difficulty of getting permits. If the construction sector is already weak, if you can facilitate their tasks so that they can rebound a bit faster, then you combine the good short-term impact with the favorable long-term impact. So you need to look at all these things, but I think really, yes, reviving the economy is the priority.
Yeah, thank you. Lars, you raised your hand.
Yes, no, I think we all agree that now and say for 1 or 2 years ahead, it's very much a question of managing aggregate demand. First income insurance and then managing aggregate demand. So I don't think we disagree on that. The reason why I stressed sort of structural reforms is rather that to get the debt ratio down again, then of course, if we can get more real growth, it really helps. And we want real growth for its own sake. But there I'm a bit pessimistic. We were fortunate in a way in the 1990s because everything was so bad. So it was easy to find reform areas where we could make drastic reforms and get huge improvements. And then we also had the IKT revolution coming, where Sweden was well positioned. And we had globalization coming. Now we might go in the opposite direction with deglobalization. We have a public employment service which is in chaos, and we don't have so many reform areas where we can see huge gains. I mean, we can improve the tax system. We can get rid of rent regulation, at least in theory. We can liberalize employment protection legislation. We can have more and better investment in human capital. Perhaps some kind of competence savings accounts that would finance that. We could reform wage setting, allow lower wages for low-skilled people so that they come in. But when you add all this up, it's not so much, the reforms that we can think of can't deliver possibly as much as they did in the 1990s. And there are headwinds to fight against. So I think we should do it, and we should do it in the long run. But one can't be as optimistic as in that things will happen in the 1990s. And we can't expect a large depreciation of the krona, of course, as we had then.
I would like Annika to comment on this as well.
Yes, I think it's very important to remember that I think the risks are bigger on the downside than the upside, and therefore I think it's as everybody say here, it's still acute, and focus on that, and then we will talk about those structural changes. We will come back to them, and I think of course there are things to do, but I'm not that worried that it sounds like Elizabeth was about the Swedish situation, because the companies were doing very good if you think about a couple of years ago. Even if we are in a downturn before the crisis, Swedish economy was rather strong and performing rather well. So I'm not that worried. But I don't know if you recognize that the government just had a press conference and they said 1 billion for free testing for everybody, and close to 7 billion for all testing, where 5 billion is for anti-corrupts testing. So now it's happening.
Yes. Sounds like at least somewhat on the scale of what Lars was suggesting. 10 to 20, you said. This sounds like on the whole like 6 or something. So interesting. I think there were several interesting things. We just have a few minutes left, but I have some questions from the audience, and maybe I should. But there is one question about, we have now gotten used to new ways of entertaining ourselves rather than spending time in shopping malls. Will we adapt the economic systems for this? And I think I should maybe extend this question and say, I mean, we will probably see less traveling for several years ahead, maybe less staying at hotels, etc. Should this be taken into account? Should we maybe say that, well, there are some companies that we just have to let go now? We can't keep airline companies alive for several years. Or how should the government think about this? Annika?
Yeah, I think we shall think in those directions. And we can already see it if you take real estate companies, for example. We have working home now, and I think most people will go back to jobs, but maybe the 20% of those who have been home can be that for one a day a week, for example. That means less space area needed in office and so on, and less traveling. Maybe we will not travel with the tram every day. Can we have a ticket for 4 days or 3 days? And there's lots of those questions, and I think it's very important to think about them. And therefore, I also think it's important to help those people, companies who are in those areas. 5G, for example, is very interesting at the moment, Ericsson and those companies around that, and not just focus on what's a problem. We also need to be strong in those areas where people really asking for their service and help products.
Lars?
I mean, this was what I talked about towards the end. I mean, that we have a problem. It has been the right thing, I mean, to try to preserve jobs during the acute crisis. But over time, I mean, we have the trade-off that we don't want to conserve an existing structure. We want the structure to change. And it's probably the case that airlines and hotels should be scaled down. I mean, that those activities should be scaled down. So we can't go on subsidizing zombie firms, I mean, forever. This is not an acute problem right now, but over time, the costs of doing this subsidizing we do now will increase, and we will have to phase it out somehow.
Actually, we are near the end here. So I should actually conclude by, well, I should thank you very much, because it has been really interesting to hear your presentations, your comments, your discussions. I should thank the audience which has been active. And I should also say I should end with saying that we will, in a week or so, on the 10th, we will have a big launch here at Forest. We have a new publication on entrepreneurship for newly arrived and foreign-born women, which I think is important at this time when we know that a lot of foreign-born people will lose their jobs. So please take a look at the Forest webpage for that. And with that, I won't try to conclude the whole discussions here, but a lot of interesting thoughts, and I think a lot of thoughts that we could talk for more hours about. But right now, I will just say thank you all, both participants and audience. Goodbye for now.
Bye.